are you sitting there like myself, wanting to set up an investment plan, learning how to actually invest and hit certain goals? That's why I invited. Well, Mike's always here, but that's what Mike is here for
Mike's
today.
always here.
Whether you want it or not, Mike's here. Well, the reason why he's here today is basically to help explain to me how I can reach my goal of buying an old Land Rover. It needs to be the long version because the short version, it's very uncomfortable to drive if you're over 6 foot. Don't know who can relate to that. I can. Mike probably never been in one, but he's
Can't
probably
fit in one.
not comfortable at least. But getting into the meat of the subject. So basically, Mike, I would like to get this Land Rover. I like to say 3 years. That would be the ideal goal. And it's basically $25,000.
So how to attain a 3-year financial goal is the question. Is what we're talking about
of
today.
25,000.
Some of you listening might have the mistaken impression that when you go to your job, you put some money in the company, whatever savings or retirement investing thing that they have through the company, and that someone's going to make sure you make money. That's not true. You have to watch your investments. You have to learn how they work. When you look at a short-term goal, like a 3-year, that should be done outside of your retirement plan. That's a separate thing. There's a number of reasons for that, but the biggest reason is taxes. If it's in a retirement thing and you go in there to get it, you're going to pay taxes. And every country in the world has figured out how to do this to you. So start with the idea you're going to put aside some money out of your income, and you're going to put it in a separate account away from your retirement money, and put it away from your spending money, your normal rent and food and clothing and stuff that you buy. Keep it totally separate. Now, in Moss's case, he wants $25,000 3 years from now. That's roughly, if he saves $9,000 a year for the next 3 years, he's got more than enough money. He's a little bit extra. So now the question becomes, what investments would allow him to do that based on his income? So we have to look at how much money he could put aside each month. So how much each month do you think you could put aside, Moss?
Well, I like to take, let's say, 500. That's $6,000 a year.
Right. So now, to hit our 9,000 a year goal, you've got to come up with another 3. So you've got to increase that money by 50%. This is a higher risk scenario, but it's certainly not impossible. It does carry higher risk.
And so this is not financial advice. Do remember that whilst Mike says that.
This is a living example we're showing you of how to go about going after a goal. So what are risks? What are risks? Risks means the money could disappear. You could invest in the wrong thing. It could be gone, which means you'd want to diversify and not have it all in one spot. You want to have it in different investments. You'd want to look at things that are probably going to do really well in the next 3 years so that you keep getting that increase. And you want to reinvest the returns. So whatever money that you're making as the value of your investment goes up, you want to keep reinvesting in that and not taking it out. Is this impossible? No, I've done it myself multiple times. But when I did it, I remembered that my retirement money was over here and this was my riskier money for the thing I wanted to buy. Keep those completely separate. If you can't keep them separate, hire someone who can help you keep them separate. Because don't mix that money. Now, what kind of investments would return that? Well, anything that is growing rapidly in a rapidly growing industry where there's availability for people to get a lot of new customers and new sales. So it's what we call the market. The marketplace for the thing is growing. You want an industry that is high barrier to entry, so not a lot of competitors can come in and start undercutting the prices. And you want something that's not currently regulated heavily. So for example, utilities like electric company, gas company, these are regulated by various governments and they can only make a certain amount of profit. So you wouldn't want to be in one of those for something that you expect to grow quickly. companies I've seen grow quickly in the past. And the past in investing is nice information, but it's not a basis for your next decision. It comes into play when you're looking at a company to invest in. If you see a manager that did really well so far, and that manager's made some mistakes and they've owned those mistakes, they've talked about them, and they've shown their ability to recover, that's where history is helpful, because you might want to invest with that manager. So for someone like Steve Jobs, for example, made some big mistakes with Apple. But buying Apple has always been a good strategy over time. There's been times when it wasn't a good buy because it was too high, but over time, it's been a good thing to own. So you look at things like that. Right now, AI is a very low barrier to entry. There are hundreds of companies competing in the AI space right now. If you were to invest in the top 2 or 3 biggest ones, maybe you have a better chance, but maybe there's something coming along that nobody sees yet. And all of a sudden it just takes off. It just becomes the one and only AI company. So this is super high risk. So you could take some of the money and invest in something like that. You could look at video games. Video games now are a very high barrier to entry for big games. They're almost as expensive as making a Hollywood blockbuster film.
I think they're actually
Some of them are more expensive.
They're like, it's billions.
You know, if you see a team of developers that have had hit after hit after hit video game and they got something new coming, that might be a place to invest. It's up to you. Moss and I were joking last week about Tarkov is an actual place. If you've been following anything with the Ukraine-Russia war, you know what's going on with that. But there's a company that put out a video game called Escape from Tarkov.
To defend that company, the game was before Putin invaded Ukraine for real.
But it's still funny. And you know, if you were to invest in that video game company, if I were to invest there, I wouldn't put a lot in. I'd put a small percentage of my portfolio. But that game's probably going to sell for a number of reasons. There'll be a number of people who want to buy it just to have it on their shelf because it's kind of humorous. There'll be people who want to play it. So you think about these things. Who are their clients? Where are they going to get more sales? And are people going to be excited about this product? And these are things you look at. So in Moss's example, we're trying to grow 6,000 a year up to 9,000. It's a 50% jump. That requires higher risk. There's no way around it because that's just the way it is in stocks.
To the last thing I want to add to Mike's bit, the reason why I feel confident in doing this is because over the last long while I've just worked on what do you do with risk management, and really working on being willing to, being willing to ride the stock to zero. Of course, you shouldn't aim to do that, never.
No.
But you might go to sleep and the next day it can be at zero. It happened before. It's rarely, but most people don't see that coming. So it might as well happen to the company you just invested in than any other company in this world. When
it can happen. There is in some markets, in some trading scenarios, there's a sell alert you can set that if the price goes below a certain point, it automatically sells all your shares, so you don't lose everything. So if you're going to invest, check that out and see if that's something you want to enact for yourself.
And one thing I learned in that same book is think about how low you actually set it. Because if you set it too high, every time the market does its natural up and down, you will sell. And the only person that will make money is the guy selling.
It's your broker.
Yeah, your brokerage. It's the only person that will make the money. So what would you recommend for a high-risk investment? Where would you set it for an investment like this? Because in this case, it would be need to set even lower.
I'd set for a 30% drop to alert me, but not to sell. Just to send a message to my phone saying, hey, it dropped 30. And I'm not looking for a 30% drop within a time period. I'm just saying if the price gets to here,
Yes.
so if I bought it here and it gets to here, I want to know. And then when it gets there, I can go look and see if I want to sell or not. Because the question then is, why is it down?
Okay.
Sometimes it's down for good reason. Obviously there could be all kinds of stupid things, and whether we like it or not, politicians say stupid things in public, and sometimes those affect the prices of stocks.
Well, to all of those politicians out there, before we end, thank you. Keep doing that. I enjoy when stocks drops and you give me good discount. Thank you very much, sir. Appreciate it. To get more stuff like this, if you're starting on your investing journey yourself, for real, like myself, make sure to check out the episodes out, subscribe, all of that good shit.